Hello, everyone. Welcome to News and Brews Sports Biz, our to-the-point video and podcast series that advocates for the financial voices in college athletics and features new developments impacting the business of college sports. I'm Ken Kurtzel. We're excited to have you tune in today as I'm joined by special guests and colleagues Brendan McKitrick and Shane Metzler. Brendan serves as a director, while Shane as an audit manager with our firm, both focusing on our higher education and college athletics segments. Hello, Brendan and Shane. Welcome. The NCAA released its 2021 edition of the Agreed-Upon Procedures Guide in May. Brendan, what was changed in this year's Agreed-Upon Procedures Guide?
Thanks, Ken, for having us. I'm really excited to be back on News and Brews. Yeah, so the changes this year weren't very drastic. The NCAA did add some information reiterating the difference between reporting requirements for Division 1, 2, and 3, and kind of the requirements of when they should have an external firm perform those agreed-upon procedures. Just as a little bit of a reminder, Division 1 schools have their agreed-upon procedures performed annually. Division 2 is once every 3 years, and Division 3 doesn't currently have a requirement for an external firm to perform that review. The NCAA also clarified categories that references bowls to football bowls, since I'm guessing it wasn't clear for some people. And I'm assuming they received enough questions throughout the year to make sure that they wanted to update that wording. There's also some clarification on Pell Grants. The first being that only Pell Grants for sports with NCAA that conducts championship competition, emerging sports for women, and bowl subdivision football are really countable. The second clarification was that student athletes should only be counted once, even if the student athlete participates in multiple sports, which is probably straightforward, but again, they just like to add that clarification. And of all these changes I mentioned, these were really highlighted in an article that we just released that you can find on our website. So Ken, that's really, nothing that's substantially changed in the new agreed-upon procedures that was released in May.
All right, good to know. So Shane, were there any mentions or modifications made related to the COVID-19 pandemic that's had such a drastic impact on the college sports landscape in 2020?
Yeah, not really, Ken. We really expected that there would be either a new expense category for kind of specific COVID-19 expenditures, or at least kind of a clarification as to how those specific COVID-19 expenditures should be classified. But the new AUP didn't really touch on that at all. And I know a lot of the athletic departments that we've spoken to throughout the year have kind of been separately tracking those COVID-19 expenditures in kind of their own separate GL account for, either for university tracking purposes or, because they, like us, they thought that, there would be a new expense category related to that. So unfortunately, those transactions that they've kind of been separately categorizing, they're going to have to kind of reclassify those into the standard, statement of revenue and expense categories. Some guidance that we did receive last year kind of related to these is that when you're classifying them out of that COVID category and now into your main expense categories, basically look at the definitions and try to determine if these transactions kind of fit the definitions of any of the main expense categories. So, for example, COVID testing for student athletes, well, that could fit the definition of category number 37, medical expenses and insurance. Whereas maybe, testing and protocol expenses for event staff could potentially fit the definition for category number 30, game day expenses. So that's kind of the first step, is just look through the definitions, see if, you can categorize these into the pre-existing expense categories. If not, that's what category number 40, other operating expenses, is for. It's kind of a catch-all to basically get anything that doesn't fit the rest of the definitions, or these unique one-year items such as the COVID-19 expenses.
Yeah, definitely a surprise. I think we all expected a COVID-19 category on the SRE, and definitely surprised not to see it. So throughout the year, looking at these procedures, we begin to find certain themes where we've come up with a new feature that we're going to call "Which Line Is It Anyway?" So Shane, what are some of the biggest themes you've seen so far this year?
Yeah, it's a great question. And I would definitely say, so far this year, the biggest theme we've seen is just the various types of support that athletic departments are receiving from universities, and the different ways universities are kind of being creative to provide that support, as the athletic departments have faced a pretty tough year. And as we've talked, it's really been interesting to see all of the different unique situations that are occurring between athletic departments and the universities. And we did want to touch on kind of a few that we really think might be applicable to the other athletic departments, and share kind of the guidance that we've received, because we think it might be helpful. And so the first one that we wanted to touch on is CARES Act funding that's kind of allocated from universities to the athletic department. And so the NCAA guidance on this is to report that support in category number 2, direct state and other governmental support. And there is an argument that could be said or categorizing that into category number 4, which is direct institutional support, since the university is kind of determining how much of those funds to allocate to athletics. But the NCAA stance is that since these are originally coming from the federal government, it makes the most sense to go into category number 2. So that's what I would do with those.
Yeah, makes sense.
Yeah, just to piggyback off of that, we've seen a lot of discussion also on institutional loans and how those should be handled. And we've also, previous to last year, we had seen some questions on that too. And unfortunately, I'd have to say that it kind of depends on the situation and, who you talk to. So, I know that's not the best answer, but, we've gotten some information that really has to do with how the money's being used. And it's also, the answers we've received from the NCAA is sometimes varied as well. I know last year, we were working with the school and we got guidance that if the loan was for operations, then it would be picked up as revenue as institutional support. This year, it appears that now they want to try and treat it as athletics debt. So obviously a little bit unclear, but as we always recommend, Ken, work with your CPA, work with NCAA, really to make sure you're recording it correctly and consistently in the SRE. So again, we're trying to compare apples to apples as much as possible.
And to keep going, and another one of the situations that we've seen specifically related to kind of COVID support from universities is universities providing reimbursements for COVID-related expenditures. And so the big question with that has just been, well, should we show this as a reduction of our expenses, or should this reimbursement be picked up as some form of revenue? And NCAA stance on that is that it should be picked up as revenue, specifically in category number 4, direct institutional support. And the reason for that is because they are if they're true athletic department expenditures, then you're going to want to show the gross amount on the statement of revenues and expenses in your expense category, whatever kind of applicable category that is. And then, since the university is providing support for those expenditures, you're going to want to pick up the revenue on the revenue side. There is a slight caveat to that, which is just basically that applies as long as the expenses are true expenses of the athletic department. So back to our previous example, COVID testing for student athletes. Sure, that, if we want to compare apples to apples with other athletic departments, well, yeah, that's an expense of this athletic department. We should show that on the SRE. Versus if the athletic department was, footing the bill for, a university-related expense, and then the university is just paying them back for it, well, then sure, that's not an athletic department expense. We wouldn't need to show that, and then it could just reduce those expenses off.
Yeah, and to try and wrap up kind of with one last item, loan forgiveness is another one. I know a hot topic for obvious reasons this year. And we've reached out to NCAA to get some clarification, since we know there's schools that we're working with that are going to get some level of help from the school or institution, and to see how those should be reported on the statement of revenues and expenses. We did get kind of a rule of thumb from the NCAA indicating that if there was any debt that was forgiven, that it should be picked up as institutional support. But if there was any debt that wasn't, keep as athletics related debt. So just to give it a little example, if an athletic department was short about $3 million and the school helped foot the bill for that deficit, but they said, hey, you're going to have to owe us half of that back. They would, you would essentially get the institutional support for the 1.5 million, and the remaining would be athletics related debt. Now, say the next year situation changes, school goes ahead and forgives that debt, then again, you would pick that up in that current period, which would be the next fiscal year, as institutional support. So again, kind of got to work through those facts and circumstances, but there is a little bit more clarity on that piece, and I think it does make sense on our end when we're kind of working through that. They are getting support for that half, and then the rest of it is truly owed back to the university, so it would be debt.
Those are great points of discussion, and yeah, as you mentioned, we're really hearing from many clients and friends in the industry that there's been a lot of creativity within different universities and colleges related to how they're managing the big deficits caused by the pandemic this year. And so definitely a lot in the athletics related debt area that the schools will have to figure out how they're going to report here. So institutions are going to begin their reporting process in the very near future. And with that in mind, do you all have any specific reminders that needed to be focused on for proper reporting?
Yeah, the first one that really comes to mind, and one we kind of have to think about every year, is conference distributions versus NCAA distributions versus media rights. A lot of the schools we work with generally receive that money through the conference offices, so it's really important that the athletics department either get guidance from the conference or get a level of detail to determine how to allocate those between the categories. We do have some schools and conferences where the conference says, hey, this is how you need to report it on the statement of revenues and expenses. So that's how they do it. And that's really for consistency between the conference. Again, there's sometimes a lack of clarity on that side. And I think sometimes it may just get bucketed in one of those categories. But I think if you can try and ask the question to the conference to either get that information or at least some guidance on how to categorize it, that would be kind of the best way to move forward.
Yeah, definitely. Another kind of tricky situation or category that we've seen that can cause some confusion is category number 8, contributions. And it's honestly, the definition for the category is kind of straightforward, but it contains a qualifier in the definition that basically says that it should only include contributions used in the current reporting year, and then later on in the definition kind of reiterates and says that contribution revenues should not include any contributions to be used in future reporting years. So they're really kind of hammering that in and basically saying, only what's used in the current year should be reported. And basically where we've kind of seen mistakes around this area is, say for example, your athletic department gets, a report from, your foundation or booster club and says, we took in, say $10 million of contributions this year, and we transferred $6 million into the athletic department to fund athletic scholarships or athletic operating expenses, really anything. So where we've seen a mistake is athletic departments will pick up all $10 million as contribution revenues rather than only the $6 million that was transferred into the athletic department. How it should be is right, only in contribution revenues, only the $6 million that was transferred in and used for athletics operating expenses, whereas the other $4 million that just stayed with foundation or stayed with booster club should not be reported. Only last thing that I want to comment on for contributions is that if the foundation or booster club are paying for any expenses on behalf of athletics or paying them directly and it's never even funding through athletics, both the gross amount of the expenses that they're paying for and an equal amount of contribution revenue should be included on the athletic department's revenues and expenses.
Yeah, and that's one we get all the time, and we talk through that every year. So definitely a good point there. The next one, that really comes to mind is contract buyouts, and it's one we generally receive questions on, especially the amount of activity that seems to happen every year, even during a pandemic. So working with the NCAA, we've noticed that they generally are trying to look for transparency and consistency. However, sometimes it's difficult based on some of the unique situations each school is dealing with. We did have a situation, we did reach out to the NCAA as far as how to generally record those transactions. And they did indicate to offset revenues that were received for money received for a buyout against salary expenses. However, we had a specific instance where we were working with the school that kind of had issues with that reporting piece, because they were like, well, hey, we didn't really use that money to offset any of the salary expense or help hire the new coach. We used that for operations. So we went back to the NCAA, kind of explained the situation, and they were like, yeah, that makes the most sense. So what happened was the amount of money that was used to hire the new coaches, say for like moving expenses, they did use that to offset that expense. However, the rest of it was really picked up as other revenue. So, as I mentioned before, Ken, and, we'll probably continue to mention, work with your CPA, work with NCAA. Again, I think they try to give you a best case scenario, or, hey, this is how we think it is, but a lot of times it's not always going to fit. So.
Absolutely. So when working with clients and partnering institutions, have any reminders come to mind that each of you want to point out related to best practices for the NCAA AUP?
Yeah, in a big picture, with AUPs, audits, anything you're working on, really setting expectations on both sides, which includes setting deadlines and really trying to set, hey, when are we going to start getting information? I think more specifically, the biggest thing that we do and, seems to work really well is start the scholarship and payroll testing earlier. You can actually start that testing. A majority of the testing can get done before the statement of revenue and expenditures is actually even released. So generally we'll ask our clients to send over a squad list so we can start making samples. And really ideally we're getting that work done hopefully in late summer or early fall, so we really don't have to worry about it later when we're trying to test the rest of the categories in the SRE. And Shane, I know we're hoping that we're wrapping up those procedures before the holiday break.
Definitely. Yeah. We love when we're able to get those done before we go on break.
Yes.
One other, kind of best practice that I just wanted to mention is that can really make your life easier as you're kind of going through the agreed upon procedures is once you have your statement of revenues and expenses ready, go ahead and pre-screen it. Look for any of the revenue and expense categories that are over 4% of, 4% of revenues or 4% of expenses, because those are the categories that your auditor is going to have to perform procedures over. So, you can look at the procedures in the NCAA Agreed Upon Procedures guide, and you can pretty much exactly see, hey, here's what my auditor is going to ask for. So you can go ahead and start getting expense details ready. You can, look at your revenue categories that are going to be over 4% and start pulling some of the bigger transactions and having that support ready. And you can really just prepare yourself so as soon as your auditor is kind of asking you questions, you can kind of anticipate those and have everything ready to really save yourself time when you're going through the engagement.
No, all of that's really helpful. Those are great tips. It's evident that obviously working with dozens of schools that you guys have really developed a deep knowledge in this area and kind of know, what works and what doesn't work and the best ways to help get these procedures done in a good and efficient manner. So thanks for joining us today. And final important question is, what beers are y'all drinking? Brendan, let's start with you. What are you enjoying today?
I am drinking, thankfully, Ken gave this to me. It's the Mango Peach Pie in the Face from Tampa Bay Brewing Company. It's a sour. I'm pretty sure Ken's not a huge fan of sours, but I am, so I'm really enjoying this beer.
I was very happy to give that one away to you.
Yeah, mine's a Karate in the Garage. It's a hazy IPA from Southern Swells Brewery in Jacksonville. Very good.
Great. And I'm drinking one from a very new brewery. It's called Macama. This is their Rare Cargo. It's a hazy double IPA. Macama is a new brewery in Fernandina Beach, Florida, and started up from some people that worked at Creature Comforts in Athens, Georgia, and then Burial in Asheville, North Carolina, two great breweries. So it's an outstanding beer from a really cool brewery that actually started right in the pandemic in November 2020. So getting off to a fast start. So again, Brendan and Shane, thank you so much for joining us. Super happy that you're part of our team, and hope everyone has a good day. Thank you to our listeners for tuning in. Cheers.
Thanks for having us, Ken.
Thanks.
To learn more about the James Moore & Company Collegiate Athletics and Higher Education segments, go to jmco.com. And don't forget to sign up for Insights to get our latest industry updates, news, and events delivered straight to your inbox. You can also follow us on Twitter at JMCO Higher Ed and on LinkedIn for the latest news as the landscape of collegiate athletics and higher education is continually evolving.